like to hand over the floor to Mr. Sherwin Fernandez from KFin Technologies. Over to you, sir.
Thank you, Bharati. Firstly, apologies for the delayed start in the call. Good evening to everyone present on this call. On behalf of Avanti Feeds Limited and KFin Tech, we'd like to convey our good wishes and trust you and your loved ones are doing well in this challenging time. The call will begin with the management remarks on the quarter, followed by a Q&A. We have with us from the management Mr. C. Ramachandra Rao, Joint Managing Director, Mr. Alluri Nikhilesh, Executive Director, Avanti Frozen Foods Private Limited, Mr. M. Venkateswara Rao, GM Corporate Affairs, and Ms. Lakshmi Sharma, CS, Avanti Frozen Foods Private Limited. I now hand the call over to the management. Thank you, and over to you, sir.
Thank you, Mr. Sherwin. Good evening, ladies and gentlemen. Apologies for the delay of about half an hour in starting our meeting, as we were all held up in another meeting. We extend a warm welcome to you for this investors conference call today to review the unaudited financial results of Q4FY20 and audited financial results for FY20. Along with me here are Mr. Venkateswara, Executive Director, Mr. Nikhilesh Choudhury, Executive Director, and Mr. M.V. Rao, General Manager, Corporate Affairs, and other financial and accounting team members. Results of Q4 FY20 and FY20 are already with you for some time now, and we are sure that we have already gone through them. Here are some of the key indicators from the financial results of our company during Q4 FY20 and FY20. Consolidated financial results for Q4 and FY20. And first, I deal with Q4 results, Q4 FY20 results. The comparative performance of Q4 FY20 with that of Q4 FY19 and Q3 FY20 have been given in the presentation already circulated to you. Gross income in Q4 FY20 is 1,046.43 crores as compared to 942.29 crores in Q3 FY20, an increase of rupees 104.14 crores at 11.05%, and 877.15 crores in Q4 FY19, an increase of rupees 169.28 at 19.3% when compared with Q4 FY20. The PBT is rupees 126 crores in Q4 FY20 as compared to rupees 73.05 crores in Q3 FY20, an increase by 72%, and rupees 102.54 crores in Q4 FY19, an increase by 22.88%. Increase in PBT when compared with previous quarter is on account of increase in sales price and decrease in raw material costs. The impact of COVID-19 is not significant on the financial performance of the company for Q4 FY20 and also FY20, as the COVID-19 lockdown and the post-lockdown effects was not really disturbed our financial results. The annual results for FY20, it is heartening to see that the performance improved significantly in 2019 compared to 2018. As you know, the industry suffered a setback in 2018, and quick recovery in 2019 is a positive development. The gross income for the financial year 20 is 4,185.53 crores as compared to 3,541.61 crores in FY19, registering a growth of 18.18%. PBT in FY20 is 484.86 crores as compared to 428.05 crores in FY19, an increase of 56.81 crores. The PBT decreased to 11.58% on gross income from 12.09% of the previous period, mainly due to increase in RM prices in both feed and processing business. The PAT in FY20 is 386.29 crores as compared to 306.62 crores in FY19, registering an increase of rupees 79.67 crores. The PAT increased to 9.23% from 8.65% on gross income, which is mainly due to opting for reduced tax under new tax ordinance in AFS. Standalone results of feed and processing division. Feed financial results, Q4FY20 results. The gross income for the quarter 4 FY20 is 778.13 crores as compared to 675.50 crores in the corresponding quarter of Q4 FY19, registering a growth of rupees 102.60 crores at 15.19%. The PBT for the Q4 FY20 is rupees 95.93 crores as compared to rupees 80.39 crores in the corresponding quarter of Q4 FY19, an increase of rupees 15.54 crores at 19.60%. Annual results. The gross income for the FY20 is 3,223.19 crores as compared to 2,783.01 crores in the corresponding year, registering a growth of 440.18 crores at 15.82%. The PBT for the financial year 20 increased to rupees 376.37 crores as compared to rupees 335.67 crores in FY19, with an increase of rupees 40.7 crores at 12.13%. The PAT in FY20 increased to rupees 285.98 crores when compared to 223.49 crores in FY19, an increase of 62.49 crores at 27.96%. Shrimp processing financial results. Q4 FY20 results. The gross income for the Q4 FY20 is 273.44 crores as compared to rupees 201.54 crores in the corresponding quarter of Q4 FY19, registering a growth of 71.90 crores at 35.68%. The PBT for Q4 FY20 is 29.95 crores as compared to 22.23 crores in the corresponding quarter of Q4 FY19, an increase of 7.72 crores at 34.73%. Annual results for financial year 20. The gross income during the financial year 20 grew to 966.63 crores from rupees 762.08 crores in FY19, registering an increase of rupees 204.25 crores at 26.80%. The PBT in FY20 is 107.67 crores as compared to rupees 91.73 crores in FY19, with an increase of rupees 15.94 crores at 17.8%. FY20 increased to the tax in FY20 increased to 99.50 crores when compared with 82.47 crores in FY19, an increase of 17.03 crores at 20.65. Implementation of shrimp hatchery. Long-awaited and rather much delayed hatchery with 200 million seed capacity has been completed in all respects and is ready to start, awaiting certain statutory clearances to commence commercial operations. It is expected to commence production by end of September this year. Industry overview and future forecast. Before venturing into future forecast of the industry, it is necessary to take stock of present situation of shrimp culture industry and global shrimp demand trends. As the industry was breathing a sigh of relief in 2019 after a serious setback in 2018, the COVID-19 broke out as a pandemic, posing a big challenge to the humanity. The coronavirus, which unfolded in a big way during second half of 2019 in China, spread like a wildfire almost the entire world, with India being no exception. The COVID-19 broke out in India during February 20, leading to imposition of countrywide lockdown from 24th March 2020, bringing all the activities to a standstill. As an initial reaction to the pandemic, the shrimp culture stocking slowed down during April and May, apprehending the fall in export prices and export market. As you know, the Q1, that is April, May, June months are during which stocking takes place intensively, and the production levels are forecasted depending on the stocking and the extent of culture area which missed in Q1 of FY21. There was also shortage of shrimp feed from hatcheries as the normal operation of hatcheries were affected by lockdown. However, things improved gradually, with farmers gaining confidence due to more or less stable farm gate prices and resumed stocking, and shrimp culture is in progress now. The shrimp production in India has registered a growth of about 10 to 12% at 8 lakh tons in 2019 as compared to 6.85 lakh tons in 2018. Shrimp feed consumption has registered a growth of about 10% at 11 lakh 50,000 tons in 2019 compared to 10 lakh 20,000 tons in 2018. In view of the COVID-19 impact, the global demand and production is expected to come down by about 10 to 15% in FY21 compared to FY20. Basing on the present shrimp culture in India, there may not be significant. There is more than 10 to 15% downfall in shrimp production in the country during FY21, provided the impact of COVID-19 will not have severe negative impact on the export market of shrimp from India. Feed consumption in India during FY 2021. In view of the anticipated drop in shrimp consumption globally by about 15 to 20%, correspondingly, shrimp production is likely to come down, and shrimp feed consumption in India during 2021 is expected to be around 10 lakh metric tons as compared to 11.50 lakh metric tons in 2019. However, the company's sales are expected to be maintained at the same level. As you know, Avanti has not only been keeping its farmers base intact, it is also adding new farmers and new areas to its sales network year after year. During financial year 21, the company is expecting to maintain its market share of 46 to 48%. Shrimp processing and export. Shrimp production and exports from India in 2019 was around 8 lakh tons and is expected to be around 7 lakh tons in 2020. As far as the company is concerned, during FY20, 13,397 tons of processed shrimp were exported as compared to 11,065 tons during the corresponding period of FY19, registering an increase of 2,332 tons with a growth of 21.07%. The growth is mainly due to continued focus on export of value-added products and also exploring opportunities in new markets. Government support. The government's policy of economic revolution through Blue Revolution has given shape to the scheme Pradhan Mantri Matsya Sampada Yojana for fisheries in May 2020 with an estimated investment of about 20,000 crores in the next 5 years. This scheme aims at increasing the fish and shrimp production in India at an annual growth rate of 9% from 137.58 lakh metric tons in 2018-19 to 220 lakh metric tons by 2024-25. Hopefully, if this scheme is implemented in right earnest, it will go a long way in sustainable growth of the seafood industry. I think with this background, now we will take up the questions from the investors.
Thank you, sir. Ladies and gentlemen, we will now begin the question and answer session. If you have a question, please press star and 1 on your telephone keypad wait for your turn to ask the question. If you would like to withdraw your request, you may do so by pressing star and 1 again. First question comes from Nitin Gosu from Invesco Mutual Fund. Please go ahead, sir.
Hi, thanks for this opportunity. 2 questions from my side. Wanted to understand, you commented that in feed business, India or domestic market is likely to see a 10% drop, and we will not see any impact on sales. If you could elaborate a bit on, farm economics or just the backdrop of what is resulting into 10% drop on domestic level on the sector basis. And second question is pertaining to demand supply environment in international market for processing products. How is that shaping up between the 2 industries, that is retail and restaurant? If you can throw some light on, help us understand.
Yes. See, as far as the feed consumption is concerned, we expect that the first 6 months of this year compared to the corresponding 6 months of the period, the last year, it's about 15 to 20% drop is there. That is from January to June of 2019 to 2020. So basing on that, we expect that since the stockings have started now in the May, June, and April, May, June subsequently, we expect that the culture will pick up in this quarter, July, August, September, further. And in overall, whatever it may not be possible to really make good whatever we have lost in the first 6 months, but nevertheless, we'll be able to make up some to great extent in the second half. Thereby, our estimate is that it is about 10% drop is likely to be there in the shrimp feed consumption in the country. That is how the estimate has been made. Of course, that corresponds to the general consumption and all. I think when Mr. Nikhilesh will explain to you how the global situation of the shrimp processing and export is.
Good afternoon. Generally, the market has been very turbulent over the last 6 months. That's because there are a lot of large chain of events that have been triggered with COVID. Some of the restaurants have been closed and they've been reopened eventually. But again, I think earlier this month, California has shut its restaurants again, which is a major, in the US market, which is a major market. The same thing in China, the demand has become low because of a second wave, a rumored second wave of the virus. But overall, it's a very turbulent time. So I think 1 month, few weeks it's low, and few weeks again, people are realizing that the product has been moving and then they're putting in orders. So as of now, we're looking at it from week to week or day to day. Overall, if you combine and take an average, it's still being stable. The prices have remained stable or are moving upwards, similar to all the other proteins that are sold in the market.
Okay. And any guesswork on retail, restaurant, how the split is and how retail is doing today?
So the main area of service would be food service, which is your restaurant chains and your basketball games and associated activities. That is traditionally the bigger market, but this year retail has played a bigger role for the protein sale. But again, like it's been on and off. Retail was very strong at the beginning of the year, and once the restaurants opened and the takeaways opened, the food service picked up again. And like I was saying earlier, the restaurants are closed again, so it's very hard to give a breakup right now. But a good representation would be about 50 to 60% retail, and the remaining would be food service.
This is as of today, or this was like pre-COVID? The split?
This is today. Usually before, it's about 60 to 70% is your food service, and the remaining is retail. Oh, so
it has more or less reversed.
Because the restaurants are closed, people still have.
Yeah. Okay. Thank you. This was helpful.
Thank you, sir. Ladies and gentlemen, if you have a question, please press star and 1 on your telephone keypad. And participants are kindly requested to restrict with 1 question in the initial round. Next question comes from Deepesh Kashyap from Equirus Securities. Please go ahead.
Yeah, hi sir. Thank you for taking my question. Rao sir, I just wanted some update on the feed realization part. So is there still a pressure from farmers, authorities to roll back the prices, or that is solved?
See, I think I'll give you a brief of what is happening in the state of Andhra Pradesh. That the state government wanted to monitor particularly the shrimp culture activity and fisheries area. In that context, they have brought recently an act called AP Aquaculture Authority. The act which is similar in the nature of central legislation of Coastal Aquaculture Authority. By this act, they want to monitor the all activities, right from the hatchery, farming, feed, processing, everything. So in that context, the issue came up that some of the farmers represented to the government that the feed prices, because of the COVID-19 situation, there are a lot of stress is there on them. So they wanted the price of the feed should be reduced. So we had series of discussions with the government, and you may remember that we had increased our feed price by 4.80 rupees per kilogram in February, January, and practically from start from February and March. So there's because considering the farmers' situation now because of the COVID-19, so we agreed to reduce 1 rupee with effect from today. Practically, it will start from today. And this is all the feed manufacturers, both shrimp feed as well as fish feed manufacturers, have decided to reduce the price. But as far as the shrimp feed price is concerned, all the manufacturers have declared 1 rupee reduction in the feed price from today. That is going to be across the board.
So that is now 67 rupees per kg, right? That is the average now after reduction.
See, as Mr. Dipesh, as you know that we had given it is about 12 rupees and all is the total cost of production, of which we have passed on 4.80 rupees to the farmer. But kind of some sort of relief for this year is that compared to the last year, the prices of the raw materials, mainly soybean and wheat flour, are more stable, because the good news is that the current year the good rains have come, and also the production, the soybean production is likely to be very good because the sowing has been completed, unlike last year when the rains did not come on time. But this year the good rains have started in time and all sowing has been completed. So we are expecting that the price this year will be more competitive, will be able to have a stable price without much fluctuations during the year. And compared to last year, definitely there is the price of this is more stable now. And fish meal price is also more or less stable. But fish meal, because of this ban now till end of August, there is a little upward trend here now, and we hope that once the ban is lifted, fishing ban, that will also come. Overall, what we foresee is that whatever that 1 rupee that we have decreased should be able to cover by the reduction in the raw material, the total cost of production by reduction in the price of the inputs. That's what we are anticipating, but it is too early because soya crop and all, it will come sometime in September, October, and we'll have to see. But as of now, it looks like that. There may not be much impact on the profitability.
Understood. Sir, now you talked about the PM-MMSY scheme. Now that is very encouraging, and we have been talking about entering a new fish feed segment. And given our cash position, have we decided anything how to take advantage of this opportunity?
It is not yet really come to a material shape, Mr. Dipesh, because the government has announced as a part of so many other measures that they have taken for facing the COVID and MSMEs and all. So we expect that it should give a good encouragement to the farmers to undertake, because a lot of infrastructure facilities are going to be given. And the modalities have not yet come, because whether this routing of this investment comes through an NABARD or any other banks, or how they route it and what are going to be the procedure, how they are going to do it. But definitely we are hoping that it will come very soon. Once they are announced modalities of investment, I think we'll be able to share more information about that. But as of now, it only looks to be very attractive for the farmers to start with a lot of financial support for infrastructure. That's very good, and also they're promising a lot of cold chains, etc. For that, I think all these things will definitely go a long way for stabilizing this industry and particularly have a sustainable growth.
Understood, sir. So, like one question for Nikhilesh also. So, Nikhilesh, so recently there was a Chinese news article that there was a COVID case on one of the shipments from Ecuador. So, I just want to understand how bad that development is, and is there any stoppage that Chinese government is doing on Indian exports also?
So right now, I think the Chinese government, I mean, if you read the full article, if you go down, the virus was not present in the product or on the product, but it was more on the packaging. And also, I think earlier today, I think US FDA gave a release saying that earlier today or yesterday that they are not able, they are saying that it's not possible for the virus to be present on the packaging, especially after it's on transit for at least a week. So we're not sure how credible the news is at the moment. There are people looking into it, but as of now, there's no adverse impact on the product. There's no concerns that are being raised.
Okay. And also, Nikhilesh, we have already reached 60% utilization processing capacity now, given the 13,000 tons that you have done last year. So how do you plan to scale up this business going forward? Do you plan to add the capacity this year or next?
So initially this year we plan to expand the processing utilization further. But unfortunately today with the whole COVID situation, there is a lot of disruption in the supply chain, especially when it comes to like a main requirement is manpower, and with the virus affecting human beings, like we're trying to control the workers' entry to the factory. Any communities that have been reporting cases, we're stopping them temporarily till things have settled down in the vicinity. So those are the practices that are happening in the factory to avoid any outbreak. The primary importance for us is to make sure that our staff and workers are safe and healthy. So that is the main impact on main constraint to increase the processing capacity and utilization this year. But we are putting efforts, and once things calm down, I think we'll be able to quickly increase the capacity.
Okay, understood. Thank you and all the best.
Thank you, sir. Next question comes from Vivek Mundra from Jet Age Securities. Please go ahead. Mr.
Hello.
Vivek? Yeah, please go ahead, sir.
Hello. Yeah. So I had a question regarding your raw material procurement basis. If you could please elaborate on, like, do you procure a raw material at the start of period, or is it a standard procurement over the year?
It is generally we procure over the year, but only in case of some of the products where the prices tend to go up, when there is a shortage of production. What we do is we, instead of, as a matter of policy, the domestically available material, the 15 days to 30 days we keep. For example, wheat flour we take only 15 days stock, whereas in the case of soybean meal, we may take up to 1 month. But in case when there is a new crop coming up, the prices are very competitive, and there is a demand for this particular product for our production purpose, we increase by another 15 days stock. So we buy at that rate only in that period. But rest of the year, we buy as and when it is required, as per the production plan.
Okay, that's helpful. Thank you. And one more last thing, your receivables, how are they coming? Like, you receiving payments from the customers on a regular basis, or has the receivable days gone up out there?
So we are receiving the receivables. Most of our 90% of our sales only is on the basis of advance payment. We get before the dispatch itself. We get 90 to 95% we get. Only about 4 to 5% where we have a collateral security and all we extend. But even that also that will come within 15 to 20 days. We don't take more than that 5% also.
Okay. And just one last thing, can you help with any way that where we can track the prices of raw materials for our understanding better? Like any like website or any place where you can help us with that, or?
So website, if you look at that, the prices of, our major raw materials is, they are soybean meal, so wheat flour and fish meal. All the three prices, what they give in the website is different, and what we have, the quality depends. The most important thing is the protein content in the fish meal or protein content in the soybean meal, and what type of soybean meal we require. There are 3 to 4 types of soybean meal. The prices differ depending upon the quality of the raw material. Even in the case of wheat, again there are other conditions like gluten content and all. All these things we see, and we select. We have a vendors list. We qualify the vendors before enlisting them, empaneling them in our vendors list. So naturally, our prices and what they give in the websites are different. And the sourcing is available in any website. Who are all the major buyers, sellers are all there, vendors are there in the website. If you take fish meal, you find a lot of companies, about 30-40 companies you will find in India. And soya, you can find 100 companies selling soybean meal. It's a wheat flour, hundreds, not in tens, it is hundreds. You will find wheat flour. Yes.
Okay. Thank you, sir. That's it from my side. Thank you.
Thank you, sir. Next question comes from Varun Goenka from Nippon Mutual Fund. Please go ahead.
Yes, good evening, sir, and thank you for the opportunity. I think some of the questions have already been answered. Just 3 or 4 basic things. One, what is the scalability of our processing side of the business? Maybe the current capacity utilization, what are our capacity plans here, and what is the scalability of this side? Secondly, now we have accumulated significant cash on balance sheet, beyond any probable capex need. Maybe our maximum capex might be 100 crores and maybe 200 crores at most. So how are we looking at really utilizing this cash towards either growth or payout or in any other way?
So on the first question, on the processing side, the scalability, I think there is a great opportunity to scale up our production and sales as well. I think over the last, if you look at our performance over the last 4 years or 5 years, we've been continuously building the business, and we actually had big plans to, not big plans, but we had interesting plans to scale up our production utilization this year. I think we can easily move up to about 85-90% of our utilization in the next 2 years. We were actually planning by next year we could go up to the full utilization. But this current setback has slowed down our plans, but certainly not halted them. And once, so that's on the scalability in terms of production. In terms of sales and product reception, till now we've received very good comments from all our customers. We've been increasing same customer sales in almost all accounts, and we think with if we can keep up the quality and also the consistency, we can further scale up our business and add in more accounts. It's still more concentrated on the US market. So once there is still opportunity in the other markets in terms of marketing. So I think there's a good opportunity. I mean, even looking at one of the largest seafood exporters from Vietnam, which is Minfo, they do about $750 million in sales, and are amongst the largest seafood exporter in the world. So if we look at that just as a apple-to-apple comparison, there's a lot more space to grow.
Yeah, coming to
So the Vietnam business that you're referring to, what is the size of that business, the processing size?
No, it's not. I was just comparing a comparable player in Vietnam who is one of the largest exporters, just to show that there's a lot of room for expansion within our business.
Okay, so a lot of room. Could you give us a sense, because this business is very labor intensive, so realistically, would you say can the business, when it goes to full utilization in 2 years, from there, let's say, can it double in 4 years, 3 years, 5 years, based on the metrics of the business?
Based on today's situation, like if you ask me pre-COVID, I could probably give you everything, just put it on a paper. But today, like all of us are just reevaluating what is the situation, see how long it will get back to normalcy. That would actually, if that picture is painted out well, then we can actually look at other things also. Right?
No, so COVID or no COVID, I would believe this is a staple for US or any other country. So is there any change in stance in that? This is not something that US can grow it or can have the capability to in-source it.
So they're not capable of definitely growing it, sir, because the climate and everything is not suitable as much as suitable in India. But I'm talking about the demand. Like if things go like this, there are already a lot of restaurant chains that are declaring bankruptcy, right? So all of these are impacts to the supply chain. So we need to see how things restart, whether people can start going out. That's for a protein consumption. That's a very important factor to see. So if things get back to normal and very quickly, everything can be done very quickly.
So I can add to what Nikhilesh said, that as far as the company is concerned, we are ready with all our infrastructure and our capability to immediately scale up our production capacity very, very fast. And coming to the one question, one suggestion you were saying regarding the labor-intensive industry. Here, we are also looking at the mechanization of some of the processes in that area also. But because of this COVID situation and all, we have slowed down on that. We are seriously working on that. So once these two things come, and also simultaneously, once, as Nikhilesh said, that the global demand stabilizes and starts the production and being a food product, definitely it is going to be promising in future. So we are confident that the value-added products we can still increase with all the whatever the infrastructure capability to scale up and also the mechanization, and we are very confident of it in future. But at this point of time, as you rightly said, that the situation is not conducive for any big planning at this point of time. And coming to the other question which you raised is the cash reserves. Yes, you are right that we have a significant cash reserves. And I think we have been discussing this in several last meetings, this conference calls. See, the management very seriously, they are considering the investment options that they have, but at the same time, they want to have a secured investment where the interests of the investors are protected. That is the fundamental principle of the company, to protect the investors' interest. And before that, we will have to see that what is our core strength and what is where we can really take an investment decision on which industry that we want to go. We have been working on this for quite some time, but maybe more than 2-3 years we have been working on that. But still, we have not been able to find a suitable investment opportunity which will satisfy or fulfill what our requirements are, such as one is the safety of the investment, and they should get at least a reasonable return compared to the company. And the third one is the growth of the value, investment. These are the three basic principles which we are looking for, and we are working on several options. But as you know that at this point of time, still the things are looking very, very uncertain. You take any industry, it is there's no some solution in sight for the improvement. And as you know, the global economy itself is on a downtrend, and degrowth is actually expected in the next couple of years. So with this, I think we'll have to wait. And whatever the returns that we are taking on, whatever the mutual funds or whatever the investments we are making, we are able to get around 6 to 7% post-tax returns. I think that should be, for the timing, that should be a satisfying factor without losing our principle. That is what we feel at the management level.
Sure. Right, sir. Thank you. Just a final point I wanted to clarify. We have dominant market share in the feed side, maybe 55 odd %. Are you seeing any decreasing competitive intensity? Any major player maybe going out of the market or something like that?
No,
any major change in the feed industry?
No, we are not seeing anything like that. But still, the dominant factor in determining the market share is the quality and the service that we render, which has been our USP. The two important things, that is one, the quality of the feed and the performance, getting a good FCR, and also the continuous service to the farmers, and also the farmers' loyalty to the product. These are the basic things which we have been maintaining consistently and not compromising on this. We feel that there are several manufacturers, something like around 27 or 28 feed manufacturers are there in the country today. But in spite of that, we have been able to maintain our lead position only because of the policy on these three issues.
Right. Thank you so much, sir. Yeah.
Thank you, sir. Next question comes from Aniruddha Joshi from ICICI Securities. Please go ahead.
Yeah, thanks for the opportunity. So, sir, just wanted to understand what would be HoReCa segment as % of our sales in USA. Also, this we had discussed long back that is there any plan to do the forward integration, that is basically roll out a own brand in US market, so that the company becomes a relatively immune to all these issues once the brand is developed, so the consumer connect becomes stronger. Any view on that front?
So the first question, sir, so normally we don't have any fixed contract for the whole year. The contracts are more short term. So usually when you say the HoReCa, we would normally term it as the food service sector. So that would range from anywhere from about 40 to 60%, depending on the market situation in the sector. But now, generally, especially at the beginning of the year, the restaurant chains were closed. Some of the restaurant chains began to start closing, and there was a larger footfall of consumers in the retail segment. So our retail sales have increased because of higher demand in that segment. But it should normalize to the same about 60% retail, 40% food service, or 50% of each once things get back to normal. So that is the first question. The second question about the branding of the shrimp. As of now, we are primarily OEM manufacturer. The penetration of a new brand in the US is very hard because the retailers itself, they have their own brand. When you introduce your brand into the food service segment, it's more of a push sale than a demand sale. So we haven't evaluated it yet, but we have thought about it. We've introduced our own brand to some of our consumers in the food service segment, both in Japan and the US and the European market. But the scope of growth of such a brand is not very high.
Okay. Yeah, in terms of the margin wise, now we are doing some sales in China too. So is the margin in China comparable with margin in USA? Or means basically if the sales to other countries like China, etc. increase, will it be same margin or it will dilute the margins?
Uh, It depends on what the product that we're exporting to. The Chinese market buys more commodity products, so definitely the margin is relatively lower. There are some customers, very few customers in the Chinese market who import value-added products, which is more comparable to the pricing in the US market. But the general sale, a bulk of it, at least I would say 85 to 95% of it is commodity product to China. The US, it's more value-added product, so the realization and also the net realization per kg is higher.
Okay, sir, roughly what would be the difference in realization?
China in the future, because it's a fast-growing market. The highest demand for shrimp is from China market today.
Okay. Okay. Do you see significantly the revenue share shifting by 2-3 years towards China?
If you take the growth component, yeah, definitely over the last 3 years, the Chinese imports have grown exponentially. But we need to see right now, like this year also at the beginning of the year, there was strong demand from the Chinese market, which has calmed down now. So we need to see going forward. But analysis and projections that have definitely shown that it's going to be a major seafood player in the future.
So, indicatively, can you indicate what was the margin difference in FY20 itself in China versus USA sales, or maybe realization difference that you can say? Let's say there is a 5% difference, 2% difference. What would be the indicatively per kg or per ton difference in the realization?
It's difficult to put it that way, but we can definitely take a look at it, because we need to look at apple to apples, because the sales that we do to China, we don't usually, the same product type is not sold to the US. There's a variation in the product, but we can get that. There is the margin, it's not the same product that we sell in both the markets.
Okay. Okay, sure. So last question. Have you faced any issues due to the labor migrations?
Definitely, sir. We did face certain problems during the labor migration. A lot of workers, when they came back home, when the lockdown was lifted, we did find us a temporary shortage of migrant workers at that time, but things have normalized since. But the main, even as a company, we are being very, very careful on who are the workers recruited, which locations do they come from. So there's a lot of background check being taken for the safety of the other workers in the campus. So that is the situation today.
So is there any major inflation due to labor migration, or you have not seen any such sharp increase in costs?
There are not sharp increase in costs, but there are definitely higher expenditure in terms of the sanitization and the social distancing, the number of people that are coming in our office, buses or anything. So, or like how they are working, or the standardizing some of the lines to make sure that we use lower manpower. So those are some things that we're doing, but there's not, I wouldn't just say that there's higher inflation. There are more safety measures being taken than the higher cost per labor.
I may add to what Nick said, that because of the low turnout of labor, the production also has come down. The overhead expenditure will go up. That way, I think there's a burden on the end product. The fixed expenses absorption is less compared to when the production is more. I think to that extent, you will have a financial impact on the product, which are variable and fixed expenses. But for that, as you rightly said, there's not much of a cost inflation as such.
Okay. So basically, due to higher fixed costs, there can be pressure on the EBITDA margins in FY21. Means, is it a fair assumption?
Could be. Yes.
Yeah. Okay. Sure, sir. Yeah. Thank you.
Thank you, sir. Ladies and gentlemen, if you have a question, please press star and 1 on your telephone keypad, and participants are kindly requested to restrict with one question in the initial round. Next question comes from Nitin Avasti from East India Securities. Please go ahead.
Hello, sir. Thank you for the opportunity. Just wanted to understand your thoughts on the recent issue with the whole Ecuador thing. So, like you just pointed out earlier, that it's still not clear that even if the packaging had the virus or not. But what is factually known as of now is that China has taken stringent action against Ecuador. So there must be some discussion at a company level where you would have thought, what if these restrictions are taken against India? What could be the implications? So any thoughts on that?
Thank you, Nitin. So first of all, from China, the companies that have been banned or suspended have detected a positive for coronavirus on the packaging, not on the product. So that's the reason that these factories were suspended. Coming to India, as of now, the Chinese government is continuously testing all the shipments that are coming in. All types of meat, protein, they are checking for similar instances. Till now, none of our shipments have been detected positive for coronavirus in the packaging of the product. But on the long term, this is something beyond our control. From what I have understood, the US FDA has said that there's a possibility of coronavirus being transmitted or transported on frozen products is very, very minimal, or there is absolutely no chance as well, because the product itself is on transit for more than a week or 14 days. So there are a lot of challenges being put to what the Chinese have said on the detection of the virus. So we need to see how it goes forward. Internally, as a company, first precaution that we're taking is that there is no the chance of any person or the virus being detected in the factory is low. We've given all the required sanitation, personal protective equipment, and everything. So we feel that the chance of such occurrence to happen is very minimal. But if, as a country whole, they take a decision, I don't think anything is likely to happen in that nature. But if something happens on the countrywide, we need to watch how the policy changes.
Okay. And just one clarification on a comment made where you said that Mr. Rao said that 1 rupee deduction was taken on the feed segment. So was the 1 rupee taken on as a manufacturer? So as what you receive as a manufacturer, what we see in your P&L, 1 rupee reduction in that, or 1 rupee in the whole MRP of the product? Some will go to the distribution, some will come to you.
What we have reduced in the manufacturer's cost. Whatever we are selling to the dealers. Yes.
Got it, sir. Thank you so much for the clarification.
Thank you, sir. Next question comes from Ashish Thakkar from MOSL. Please go ahead.
Yeah, thanks for the opportunity. Akhilesh, May, June and July are the peak months for our shipments on the processing side of the business. But given the fact that now, Thanksgiving is also coming up in the US, and this resurfacing of the virus issues, how do you see the response from the distributors? Are there any active talks which are going on between the distributors and you as to how the shipments will be done? And also, obviously, on the demand-supply scenario?
Definitely, sir. We have a discussion with all, at least most of our customers on a weekly basis. So we do understand and also try to adapt to the changing demand and supply situation. As of now, from what I understand, the sales in the US, especially in the retail segment, have been really good. Coupled with the lower production capacities of all the factories around the world, because everyone's facing the same problem of COVID, and people are trying to maintain more social distancing in the factory and avoiding taking workers and employees from affected areas. The production capacity have slightly reduced all over. So there is a lower production output coming per factory. So if there's any lower demand because of the close of restaurants and everything, I feel it's being balanced very well between multiple markets. This year we've had strong demand from Chinese, Asian markets, not Chinese alone, but Asian markets. The US also, if you are established, reliable and consistent supplier, there's been strong demand for your product as well. Since most of this reliability has been established over a period of 2 decades or so. So when the customer feels that, I cannot travel to India, he would rather select a reliable supplier instead. So overall, I think demand's been stable. If you're well set up, you have good product, a good reputation, I think there's no problem for especially our product.
Hello?
Yeah.
So just one last question. So in terms of whatever we might be budgeting for the US geography, what's the target that we are trying to achieve here? Can in the full year of FY21, can we meet 70-80% of our targeted or budgeted sales?
For this year?
Yeah.
So yeah, for 70 to 80% of
Target.
I think we should be able to meet 70 to 80%. Yes.
Okay. Fair enough. Thanks, Akhilesh, and all the best.
Thank you, sir. Next question comes from Manoj Gar from White Oak Capital. Please go ahead.
Yes. So very good afternoon, and thanks for giving this opportunity. Mr. Rao, in terms of outlook, you have commented about 10% kind of degrowth. What is the outlook for calendar year 2020, or you're talking about fiscal year 21?
Because the voice is breaking. Yes,
So, yeah. So, So,
the voice is breaking.
Can you hear me now?
It's better now. It's better now. Yes.
Yeah. So, the outlook which you shared in the prepared remarks about 10% degrowth for was it outlook for fiscal year 20 or calendar year 20?
See, the feed consumption, I said that there will be, in the country, there will be down by about 10 to 12%, which we are expecting only 5 to 6% down. That's what I told as far as the feed is concerned.
Right. And that is for calendar year 20, right?
It is, no, we are taking the calendar year, you are right, it's calendar year, 2020. Yes.
So, yeah. So, I'm a bit surprised because given the fact that there was no stocking which happened in the months of April and May, given the lockdown and all, and there was a delay in the onset of swine in June, July, August. I think we were earlier expecting a very good, trading activity in quarter two. So whatever the challenge we are seeing today, is it more because of, is it more because of the demand side issues, given that, some of the markets have been closed down as infection has resurfaced, or is it more because of, I would say, the supply side issue right now?
I explained that the shrimp culture in the country in the first half of this year is down compared to the corresponding 6 months of the last year because of the previous year, because of the COVID impact and lockdown. So because there were the seed was not available, because the hatcheries they were not working to full capacity, and so there was a shortage seed. Why did they stop that? I mean, why did they slow down? Because the farmers hesitated to stop early in March, April. They postponed it because of this COVID situation. They wanted to wait and watch how the things develop. Only in the later part of the April, May beginning, they started asking for the seed. But at that time, it was not readily available. They had to import the brood stock and produce the seed and supply it. So it took time. It took almost like June. Naturally the stocking also got delayed. So the impact of this being spent in the first quarter, that is April, May, June. That's what I told in my earlier response.
Okay, so probably I might have missed it, sir. And the second question is, I think the government of India is now notified in terms of export incentive and MEI. And what we have learned that probably the new scheme has maybe 2% lower incentive than what it used to be in the past. So we just like to understand that who is going to be this 2% cost? Is it like we are going to pass a part of that to the farmer, or we have to be this entire 2% lesser incentive now? Incentive. Export incentive. Export incentive.
Yes, sir. No, I think, yeah. See, it is actually the company has to take it. The company has to take it, but we are working towards, reinstating the MES. We hope that there was some problem in the initial stages. Now it has been sorted out.
So is it that it's
fine? That is, we are trying to reinstate that 5 to 7 again. Yes.
So the understanding is the incentives are going to be, are the incentives going to be more or less same, or it would be lesser than what you used to get in the past?
No, I didn't get. Your voice is breaking.
Okay.
Earlier we were getting 7%. Now we are getting 5%.
Yeah, so there will be a 2% impact which will happen now because of lower incentive, right?
Global? No, I didn't.
I think no, sir. There is an issue. I'll rejoin, sir. Thank you very much.
Okay.
Thank you, sir. Next question comes from Ayush Mittal from Mittal Analytics. Please go ahead.
First of all, congratulations on a good performance in Q4, especially on the growth on the feed side. So in continuation to the previous participant was asking about that export incentive reduction on the processing side. Can you share more details about that? How much is the reduction on the export incentive?
2% is the reduction. 2%.
2%. So basically, we were getting almost along with MEIS and duty drawback, I think the processing industry was getting 9% incentive, which is now down to 7%. Is that right?
7. Yeah, I think my colleague will explain to you how the
Earlier we were getting MEI 7% and duty drawback 2.7%. Now MEI has been revised to 5% and DBK duty drawback has been increased to 3%. Now we are getting total incentives 8% as against 9% earlier.
Okay, yeah, that is very helpful. And so in the balance sheet this year, we have seen increase in inventory, while as you explained that the season we'll see a drop in Q1 in the farming activity of the farmers. So there has been a substantial increase in inventory. Any comments from your side?
See, your standalone, about feed or question is on processing.
So it's an overall number that I'm seeing on balance sheet.
Okay, it must be only standalone. The standalone is the inventories because normally what we do in the month of March, as the season starts, we keep the raw material stock. Particularly, in the February month, you have a lot of wheat flour, wheat products coming out. So the wheat crop comes in the month of February. So normally we stock for April, May, and June. See, this year also we start procuring raw materials right from January, because the April, May, June, as you know, that is a peak consumption period. So we keep the stock of inventories, raw materials. As on 31st March, it will be this year also. We expected there will be good production in sales in April, May, June. So to keep the stocks ready, we procured in the month of February and March. That's how it's looking. But immediately it gets consumed in the subsequent period.
Okay. And so, in continuation to what you were sharing, the farmers had panicked and there was a drop in farming activity in April and May. But we are still expecting the year to be broadly okay for the industry. So, are we expecting growth to happen in H2 or maybe from Q2 and Q3 onwards in the industry?
It means that because when we have lost about 15% to 20% in first half year, second half year that will made up to some extent. It may not be full 15 and 20%. It definitely about 10%. We expect that it will be made up. So overall, there will be decrease about 10%. That's what we are anticipating.
Okay. Thank you, sir.
Thank you, sir. Next question comes from Jignesh Kamani from GMO. Please go ahead, sir.
Sir, you mentioned about the broodstock issue in the first quarter. How is the current scenario of the broodstock, and it is sufficient to take care of the maybe around 10% growth in the second half in the plantation part?
Yes, our hatchery is ready, and it will start off in September.
No, I'm talking about industry. So industry face issue in the broodstock in first half. So right now, enough broodstock is available to take care of 10% growth in plantation in second.
It is available now because the moment the farmers started buying seed, the hatcheries, there's imported broodstock, and now the seed is available. Only for April, May, when the initial stages there was a shortage. Now it is available.
How is the farmer sentiment? They are ready to increase the production by around in the second half?
This farmer sentiment is very good, very encouraging, because there is no, it's stable. The farm gate prices are stable, and in fact, as Nicholas said, it is only on the upper side when it's moving up. So naturally, they are very confident, and the culture, we are expecting that it to be in full scale now. Only thing is because we have lost about 6 months in this year, so may not be a growth, but definitely the small maybe 5 to 10% down, and the rest of the half year.
Thanks a lot.
Thank you, sir. Ladies and gentlemen, due to time constraint, that will be the last question for the day. Now I hand over the floor to Mr. Sherwin Fernandez for closing comments. Over to you, sir.
Thank you to the entire team of Avanti Feeds Limited for giving us the opportunity to host the call. And I would also like to thank the investors and all the participants for having the time. Thank you.
Thank you so much.
Thank you, sir. Ladies and gentlemen, this concludes your conference call for the day. Thank you for your participation and for using Doorsabha's conference call service. You may all disconnect your lines now. Thank you and have a pleasant evening.
Your conference is no longer being recorded.